Hi, I'm Emma Wall, and I'm here today with Fidelity's Dale Nichols to talk about investing in China and Asia through the coronavirus. Hi, Dale.
Hi Emma, how are you?
I'm good, thanks. First off, where are you talking to us from today?
I'm talking from Singapore. I kind of got caught here, so to speak, and have been trying to make my way back to Hong Kong, but it's really not easy to travel now, as you know. You're sort of looking at basically 2 weeks in quarantine anywhere you go, and you've got to make sure you've got access to everything you need. We're all working from home, so I'm sort of here at the moment looking to get back to Hong Kong.
And that kind of insight into your personal circumstance, I imagine, is mirrored across the region. How has it been
Right.
investing in particular in China since the beginning of the year?
Yeah, I mean it's been a wild ride. Obviously, it's been quite interesting. Obviously, China has actually done quite well if you look on a global basis year to date, and particularly the Asia market. And I think it seems the market is really reacting to really how countries are managing the virus. Um, it's quite interesting. So as soon as the markets, I think definitely want to see new cases level out and ideally come down. So we've achieved that through most of Asia, probably in India and Indonesia, outside of you know other ones that are ever increasing, but generally the countries here have it under control, and China probably being the best example. You are seeing some flare ups, but I think people definitely have the view that China has things very much under control. So now the focus is really on the recovery. So we're doing calls with companies constantly, getting a sense of the rate of recovery, and really trying to analyze who comes out stronger on the other side. And there's actually some pretty big differences across different industries, even different regions. So that we found that definitely, the manufacturing side came back the fastest. So very early on, end of March, the companies had most of their workers back that were up and going, ready to get things back, and we're already back at sort of 80-90% utilization. Most of them are back to full utilization now. So that recovery, I think, was deliberate and came back pretty quickly. We can talk about that because I actually have a little bit of concern for some of the manufacturing companies as to whether they're fully aware of the demand shock that's about to hit them from overseas, the ones that have overseas exposure. And then the other thing to watch is services, and that's been slower, as you would expect, depending on the industry. So restaurants, our sense, and speaking to companies, if you're looking on a sort of a same store sales base, you're back to sort of down 10 to 20%, depending on the company. If you look at an example, might be Yum China. Obviously, they've got one of the biggest owners of restaurants in the country. They were at sort of down 20% end of March, and down to minus 10 at the end of April. I recently had a call with a company. It was the first I'd heard were back to flat, but they have a very kind of a hot format, so I expected them to sort of come back pretty quickly anyway. And just on the regional aspect, that's a factor as well. So generally, the closer you are to Beijing, the stricter sort of lockdown has been, and the slower the recovery has been. And I think for some of areas like Beijing, there's where you can sit in restaurants, the numbers, that sort of thing. But generally, our sense is things are recovering week to week. Things are definitely recovering, and the sense from companies is they're very keen to get back and sort of get on with things. There are some pockets where things are showing back. We're going back to similar trends. So looking at some of the auto dealers, definitely premium is definitely doing better than mass. So and I guess we shouldn't be surprised. There's some built up demand there. That's clearly coming back.
I was going to say on the manufacturing point, I think it's a really interesting one, not just for China, but this pandemic has reminded us quite how interconnected the world is. Again, it's not just China. We've seen
Right.
with huge swathes of European manufacturing and industry as well. You can start to recover yourself as a nation, but if a particular sector of your economy is dependent on demand from outside, really we're waiting for everyone to get better. And I mean that both from a health and an economic standpoint before we can all recover.
Yeah, yeah, I agree. It's a really it's an interesting point. We talked about the sort of the way markets have recovered. To me, it's been a little bit surprising in that, I would have expected markets to look forward. And if you've seen the example of countries that have been able to get it under control, generally markets are forward looking and would apply those similar principles to other markets, but they're still very focused on each, I find individual countries, process of dealing with it, which may be right, because we are seeing some differences, in how countries are handling things. But I do feel like, the playbook is kind of there for recovery, and it's not easy to get there. We're going through this, this period that, obviously we're ahead of you in the way we've dealt with it. But I think the example is, has kind of been set for how to manage things.
And you touched a bit on the services sector there, which obviously is a large part of China's economy. I think tourism is about 10%. One would assume would be kind of behind the curve, just simply because social distancing to be abandoned in order to work fully as a sector. Are you beginning to see green shoots in services, though?
Yeah, you are. You mentioned travel, and I'm still, as you know, quite bullish on the travel thematic, and I think it will still play out over time. But the government is still very focused on social distancing. It's still there's still caution there. So that's probably been the area that's lagged the most. You've seen, the numbers, as I said, sort of are recovering week to week. But if you look at, hotel occupancy, we're still probably down, 40, 50%, if not higher. I've seen some other numbers with actual, it's still quite low, but, recovering. We just recently obviously had the May Labor Day holiday. And the general sense was not, I think people were generally pretty happy with those numbers. You need to be a little bit wary because it was one extra day this year. So, it's a bit hard to do, totally direct comparisons. But things clearly, moving in the right direction. But if you're talking about travel, it's all domestic. Obviously, when we look at companies like Ctrip, which I'm still again very bullish on, in the long term, there's no international really travel at all, and that will be really the last area to come back. But domestic, as I said, week by week, slowly improving.
What about any cultural or social permanent shifts that you think might come out of this and may even create investment opportunities as much as kind of can change the investment case? In developed markets, we're talking a lot about the shift to remote working and whether actually that ever goes back to the way it was. Obviously, there is a lot more industry in China which can't be done remotely, but are you seeing sort of themes that may well play out as a permanent shift?
Yeah, and that's obviously the type of thing that we're talking about, trying to analyze and trying to really understand the longer term trends coming out the other side. In general, I think it's fair to say that most, I think a lot of the trends that were happening anyway are being accelerated. So, as you know, in the trust, that sort of, thematic is obviously consumption, but also, the shift online is a big thing that was already happening faster in China. The sense is those things have been just accelerated, and obviously e-commerce is one thing, but services as well. We did calls with some of the education providers last week, and that shift online is definitely happening. The likes of ByteDance, which are obviously one of the biggest players in short form video, their business is doing extremely well. Gaming, we talked to Tencent as well, very strong numbers. So the sense is a lot of those things that were happening anyway are just being accelerated, which I mean is I mean, okay for the trust. We've got, I think, over 40% of probably the holdings that have exposure to those types of areas. So there's a lot of potential beneficiaries. But the general sense is a lot of the trends we're seeing anyway get accelerated. For things like remote work and that sort of thing, I think that's definitely a factor. How that impacts things, demand for things like office space is an interesting one that we're tackling. We're trying to understand because there's obviously, I think you're seeing people working from home more, but at the same time, the whole idea of sharing offices and things like that, which was a negative in terms of office space, have the potential to reverse as well. So those types of trends we're trying to analyze and get our heads around. But definitely the shift online overall is just accelerating.
And what about urbanization? Because we've talked about that in the past, about the general trend of urbanization in China. Do you think that what's happening now will impact that, even in the short term? Because of course, cases, for obvious reasons, have been higher in cities.
Right. I don't think so. I think that trend is sort of very well entrenched. It's something we've seen as economies develop globally. I mean, it may slow things down somewhat, but I can't see it really derailing that trend, which is obviously a strong growth driver for the country.
And where do we go from here? You're already still one step ahead of where we are in Europe in terms of sort of relaxing of restrictions and sort of beginning to see economic and commerce recovery. What does the rest of the year hold, as much as anyone can look into a crystal ball at the moment?
Yeah, I mean, to be honest, it feels like more of the same. And that's also the sense I get from, talking to my colleagues on the ground in China, generally feeling more upbeat, but, it's a gradual recovery. I feel like it's going to be really more of the same, a gradual recovery. There's still, I think, from the government's perspective, a fair bit of caution. And, you've seen, again, some relatively small flare-ups, but they're very quickly to act on those. So I think there's going to be, still a fair bit of caution there. So, I think it'll be a gradual recovery. We're watching closely what the government does as well. So we've got, obviously some really big government meetings coming up at the end of the year, and I think you'll see, another push on the stimulus front from EBOC. Obviously, there's a lot that they can do on the monetary side, given that what they've done relative to other governments globally is really not that significant. So there's a fair bit of potential room to move, and I think you'll see more actions on that front, both in infrastructure. This is obviously on the fiscal side, both in infrastructure, but also in terms of consumption. So that's an area to watch. But the general sense is a sense of recovery, and I think for a lot of the companies that have global exposure, they're looking at how the recovery plays out in other countries. Obviously, for the trust, I'm very much focused on the domestic opportunity, so it's less of an issue for most of the companies that I'm invested in. But I know the ones that do have global exposure are watching closely how other countries and economies come back.
Dale, thank you very much.
Thanks, Emma.